Thanks, Per, and thanks for the opportunity. Okay, so in terms of today's presentation, I'm going to start by giving you a bit of a rundown of our FY21 results. I'll then talk a little bit about what Prime's all about, who we work with, and then I'll finish off by giving you a bit of an outlook statement as it is for FY22. Okay, so the FY21 year was very important for Prime. It was our most important year because it's the third year of how we've started to restructure and drive and grow our business. Importantly, we had underlying EBITDA up 22%. We had margin growth, now at 30% of turnover. We improved our net operating cash flow by 48%, improved our dividend for our shareholders. That was up 60% for the final dividend. We had revenue growth, cost control, so cost down 3%, and we reduced our debt by 27% to 1x underlying EBITDA. So overall, the team delivered a fantastic result for our shareholders and just shows the sort of momentum that we have as a business right now. So in terms of our business and who we are, so Prime's an integrated advisory firm. We deliver accounting, wealth management, corporate advisory, and SMSF advice and admin. Our purpose, what we're all about, is empowering our clients to achieve their aspirations. We have 90 dedicated team members across Melbourne, Sydney, Brisbane, and also the Philippines for our back office. And we deliver substantially all 4 services in all 3 locations. In terms of our revenue and how we go about generating that across the various divisions, approximately 60% of our revenue is generated across accounting, business advisory, and capital or corporate advisory, with the remaining 40% coming from wealth management and SMSF. In the wealth management part of our business, we currently deliver advice across $1.2 billion of funds under management. On our capital structure, we currently have a market cap of about $30 to $35 million. We have a share price around 16 to 17 cents. We have reported EPS of 1.69 cents per share, and we're currently trading at around about 10 times historic EPS. Our dividend yield is 4% fully franked. Our most comparable peer is Kelly Partners Group, very similar in terms of how they operate, but Prime tends to deliver more diversified services in totality. Importantly, we have a very strong ownership mentality across our team, and 44% of the firm is owned by our key management and staff. Some additional key information as it relates to FY21. So we turn over around about $22 to $23 million. And our underlying EBITDA was $6.8 million in FY21. Revenue I've touched on already in terms of the split, the 60-40 split, but it's important to understand how that revenue is growing and what that might look like into FY22. So for FY21, the accounting, business advisory, and capital division had revenue grow by 10%, and the wealth division had a decline of 4%. So that's wealth and SMSF. Importantly, we're seeing that reverse in FY22, and I'll talk a little bit more about that in a moment. With revenue historically over the last 3 or 4 years, it's grown at between 4 and 10% and 4% for FY21. But the way we're going about growing our revenue is across business and corporate advisory, our wholesale, our wealth management services, and virtual family office approach. And our SMSF division is growing very quickly. But really the key to how we've differentiated our service offering and what we do for our clients and how that grows revenue is all around this one connected philosophy. This philosophy of one connected group of services for our clients and one connected team that's dedicated to delivering on that value proposition. But our revenue is not all about just organic. We are also now starting to look at inorganic growth opportunities. And in August of 2021, we actually recruited 2 new team members that brought with them additional capability, but also an additional client base that we could offer additional services to. So as part of Prime's strategy, which I'll touch on a little bit more towards the end of the presentation, we're looking at not just organic, but also inorganic growth as well. Expenses and EBITDA I've touched on, and obviously over the last 3 years, we've had very strong cost control, which has allowed us to reduce costs by 6% in FY20 and 3% in FY21. We are running the business very efficiently now. And as we start to accelerate the growth in our revenue, we expect costs to also increase marginally along the way as well. In terms of margin and cash flow, I've touched on the 30% operating margin, but you can just see there from this slide how much that's improved over the last 3 years. 19% FY19, 26% in FY20 to 30% in FY21. Operating cash flow we're particularly proud of in terms of how that growth in earnings is now being reflected in cash, which obviously allows us to pay dividends and also to reinvest in the business. But a 128% increase in our operating cash flow in FY20 and then a further 48% increase in operating cash flow in FY21 is constructive as to how we're going about building and improving our business. Dividends I've touched on, but they are essential. And in FY21, we paid out 41% of reported NPAT for members and shareholders. And we've forecast, importantly, into FY22, a further increase in our dividends, seeing them move from, for the full year, 0.7 cents per share in FY21 to 1 cent per share in FY22. That's an over 40% increase in dividends. The balance sheet's pretty straightforward. I've touched on the debt at $7.1 million. We see that coming down over FY22 and continuing to be positive in terms of the business dynamics. That's really the main stuff that we need to cover off because we've already touched on cash flows and the balance sheet more broadly. Obviously for Prime, it's not all about purely the profit, and we are very respectful of the fact that we have a job to do for our clients and a contribution to make to the community. In terms of our clients, we measure regularly how they are responding to the services that we're delivering, particularly around this one connected philosophy, which, as I said, I think really differentiates our approach to professional services. We're really proud to deliver an improvement in our Net Promoter Score over FY21, which saw an improvement of 34%, which puts us in the top quartile when compared with peers. So very proud of what we're doing there. We're obviously looking to also give back to the community, and we run various seminars and free educational series for our clients and our networks to make sure they have as much information as they need to grow their business and contribute to their own communities as well. In terms of the strategic plan, Prime is a business that has been around for 20 years, and we do have this very strong philosophy about delivering value for our clients through this one connected philosophy. But our key priorities for FY22 remain as growing from an organic and now inorganic point of view, recruiting the best talent in the market to come into our ownership structure and offer something they can't otherwise get with some of our competitors. So a strong focus on our clients, our people, and driving efficiency through centralized services across finance, IT, marketing, etc. With our outlook for FY22, what you're seeing on screen here, the big ticks, are what we referred to at the end of FY21 with respects to some of our key metrics. So we wanted to increase our earnings and our revenue growth into FY22. The bullet points here that I'm going to talk through is our update. So we are expecting to grow underlying EBITDA by between 5 and 10% in FY22. We are accelerating our revenue growth from what was 4% in FY21 to 8 to 12% in FY22. In fact, for the first quarter of FY22, our revenue has grown by 12% when compared with the previous quarter in FY21. We are more actively seeking to grow the business, and we have some initiatives that we're expecting to impact in the second half, and I'll provide an update on that as part of our half-year results. Increasing dividends is essential and something that we focus on. So I can confirm that our dividends will increase in FY22. In fact, the interim dividend that will be paid in April of 2022 will increase by 67% to half a cent a share versus 0.3 in FY21 interim. Debt will continue to decrease. We see that being at the midpoint of our guidance of 0.5 to 1 times underlying EBITDA. And we will and have started to consider capital management initiatives. We spoke about this as part of the FY21 results, but we commenced a buyback on the 1st of October, and we've currently spent, as at today, around about $85,000 to $100,000 on that buyback at an average share price of 17 cents. As part of also thinking about the future of work for our team, we've also started to reduce our footprint. In conversations with our team, and our footprint from an office perspective, I should say, And what we heard from our team is that they'd prefer to spend 2 to 3 days a week in the office and the rest of the time focused on our clients and growing the business. So we've reduced our footprint in Melbourne, which is our largest office, and that will drive an improvement in cash flow by approximately $300,000 each year on an annualized basis. So our focus is on our clients, on our team, growing the ownership, improving the share price, and driving value for all of our key stakeholders. That's the update from Prime.